Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today we're going to be looking at Salesforce stock as we look ahead to their earnings over the next 10 or 11 days, something like that. I got a couple requests to review Salesforce, and so that's why I picked it out of the list here today. So with that, we'll do some fundamental analysis on Salesforce stock, try to project where the company is going over the next couple years, and of course make a price target for ticker symbol CRM. Reminder as always that my stock picks and projections are just my opinion for your entertainment. However, if you do enjoy stock market analysis like this, going deep on stocks like Salesforce, please give the video a like, subscribe to the channel. Thank you to everybody for your support. All right, so to kick things off on a high level, one of the most attractive properties to a stock like Salesforce is it's a software stock, it's a cloud stock, and basically once you get, especially big companies, integrated into software like this, it's very difficult for them to leave without wasting a ton of time and IT resources. So every client that Salesforce brings on, the retention rate is very, very high because you have to upload all your customers, add your trackers for sales calls, customer service inquiries, stuff like that. So it can really turn into a monster machine. And when it comes time to maybe think about if you're going to renew your Salesforce contract or continue to pay for it monthly into the next year, it's very difficult for companies to say, let's look for a low-cost provider or let's look for a new provider out there because they've got so much intertwined with this. Not to mention that I think Salesforce does a pretty good job of building upon their existing sort of sales proposition, right? They're always adding connecting widgets to different databases and services to pull in more information. And as we know, they've been on the hunt for acquisitions recently. So this is a company that doesn't just rest on the fundamentals that got it to this point. They're always looking to improve the service, and that's very important. Now, another bull case for me with Salesforce is just the fact that the sales industry, right, has obviously been hit hard by COVID. The concept of business travel, person-to-person sales meetings, that whole world was shut down. And while many companies were able to adapt with Zoom meetings and things like that, there's just certain industries where probably sales weren't that successful. And I think you have this great mix right now that's kind of bubbling for Salesforce for the long term, which is they brought in a lot of new companies during the pandemic who needed online sales type software to help them navigate what used to be a face-to-face world. And then on the flip side of that, you have the economy resuming, right? So some of the relationships and companies that were doing well with Salesforce, call it 3 to 5 years ago, they may have been in a lull, but now they're coming back to the surface. So it looks, or at least feels, really good from a sales standpoint that in the corporate spending world, you've had a lot of money that was maybe paused, right? And that's going to be coming out. Salespeople are going to be on a ton of pressure in 2021 because a lot of the excuses, so to speak, will have evaporated. And now it's time to make some returns. And if you are a salesperson, having a tool like Salesforce is going to be a big part of your day, and it's going to give you an advantage to keep track of prospects and where they're landing in the cycle. All right, so Salesforce stock here today, trading at $214.50, down about 1%. Recording this here in the middle of May where we've seen a lot of weakness in the NASDAQ. Even today, you're down almost a full point. In fact, it was down a full point earlier in the day. And this is a company, if you look at the year-to-date chart, like everybody else, it had this sort of Valentine's Day peak, almost at $247, and it's dipped, and it's always hard to tell, like, how much of this is Salesforce dipping and how much of this is the market dipping. From my perspective, I would say that this is more of a market slash valuation meltdown for Salesforce as opposed to, them performing or underperforming to their goals. P ratio on Yahoo, 48.95. Now, the thing that does get a little fuzzy with Salesforce is the GAAP versus non-GAAP reporting. So we're going to spend a minute on that here in a second. Basically, the general market, so most stock market websites are going to be reporting non-GAAP earnings for Salesforce. You see that Yahoo has an EPS of 438. That's how they get their PE of 48.95. That's going to be important as we look ahead because the spread between GAAP and non-GAAP on the earnings side is actually going to get a little bit bigger this year. Okay, stopping over here at MarketBeat. This is a free website you'll see on my channel every once in a while. And whenever you have a stock that's kind of jumping between non-GAAP and GAAP, and you have a hard time figuring out what was their GAAP EPS, in my opinion, MarketBeat does a pretty good job because they show both of them right next to each other, so it's an easy site to just go reference. We have reported EPS. So what was CRM talking about on their press release? Well, they were talking in non-GAAP numbers. The GAAP EPS comes in below that. Some of the things that flow into non-GAAP EPS but get omitted from GAAP EPS would be certain types of investments that the company would have made, stock-based compensation, a lot of things that the company will say did not reflect their performance in a quarter, right? So it's sort of a selective transitioning between the two. However, I do, at the bare minimum, for all of my stocks, I investigate on a GAAP EPS level. You just have to eyeball the stock itself to make your decision. If the street is going non-GAAP and you see that mostly reported for Salesforce, you can use that for your PE, but I always like to keep a GAAP number behind the scenes because there is this world that potentially right now that we're seeing as the market's bleeding out I should say, the GAAP number start to become the de facto for CRM. So just keep that in mind. All right, taking a look at the historical valuation measures for Salesforce. These are on a non-GAAP level. Trailing PE is a little bit lower than we've seen over the past several years. This is an annual chart. So 49, we'll call it, versus 59, 200, and 163. On the forward side of 62 for the multiplier, that's right in line with what we've seen out of Salesforce in the past. Maybe a smidge higher than some of these numbers that landed in the 50s, but generally speaking, you can make the argument that Salesforce is valuated on about the same level that we've seen in the past when it comes to a PE perspective. PEG ratio at 427, that's probably a little bit higher than we've seen over the past few years. Price to sales under 10, which is good for this market, but I wouldn't call it cheap compared to Salesforce other years. I would just say right in line. All right, let's take a look at what analysts are projecting for Salesforce here before their first quarter earnings. Last year, on an earnings per share basis, it's $4.92 on a non-GAAP scale. This year, though, they do see that going down. So we've got 36 analysts, which honestly is a lot. That's a decent chunk of analysts to be calling in on a stock. And going from $4.92 to $3.43, obviously that's going to do one thing. That's going to raise your PE ratio. That's also going to raise your forward PE ratio. So you have to keep that in mind that you will lose technically, you'll be taking a step backwards on a fundamental standpoint if this 343 comes to fruition. Even the high estimate of 382 is over $1 away from last year's 492. And if we look ahead to 2023, so they run from February through the end of January. And basically their fiscal years are called what seems like a year ahead. So this current year that we're talking about, it's actually mostly comprised of months that are in the calendar year 2021, with the exception of January 22. But when we talk about next fiscal year, this is really mostly happening in 2022. It's just labeled 2023 because that's how their fiscal works. But if we go to the average estimate of 415 for next fiscal year, it is above what we saw in 2022, but it still falls short of the year ago EPS. Now, on the high side, you're only about 10 cents off. But again, from a fundamental perspective, you're going from, this basically being the high. Then you're projected to go down, and then you're projected to bounce, but not go up quite as much as the 2021 fiscal year. So that's something to keep in mind. Now, it doesn't mean that they're not performing well. You can see on the revenue side, we go from 21 billion to an average estimate of 25 billion to an average estimate of 30 billion. So you've got that going for yourself, well over double digits each year, and that is a very important metric in today's market, which is growing revenue. Now, when you see revenue growth rates, basically at 20%, but a declining EPS, what comes into play there is the acquisitions, most likely, right? So purchasing other companies like Tableau and Slack, which Salesforce has acquired, it just means that it takes off of the earnings or the EPS. But obviously, in an ideal situation, you're looking to grow revenue more by using those companies. So the only thing, again, that it hurts is the short-term fundamentals. But anyone who comes in and judges stocks by a PE ratio, or at least investigates them at a PE ratio like I do, just know that the fundamentals for Salesforce are going to go down a little bit in terms of valuation, but the sales will continue, at least on a projection scale, they're going to continue to do well. All right, so to visualize that a little better over here on Seeking Alpha, January 2021, which is already in the past from a reporting standpoint, EPS of 492. Then you come down to January 2022 and the projection is lower, as is 2023. But then you start to see the build out over the next several years. But you get an idea by seeing this chart that Salesforce had a fundamental boost from an EPS standpoint in 492. Then they're going to take a couple steps back over the next 2 years. All right, now on the growth side of things for Salesforce, this compares them against some different software suppliers, most notably Adobe. Granted, they sell different things, but these two guys are really at the top of the class in software stocks and recurring revenue. And revenue growth going forward for CRM, 21%, only 16% for Adobe, which is still spectacular. But, Salesforce has Adobe beat on a lot of things. Revenue on 3-year CAGR, 5-year CAGR, EBITDA growth, Adobe gets the nod for year over year. But going forward, CRM could beat them, and on a 3-year basis, they certainly do. Scrolling down to look at the balance sheet fundamentals, you got revenue trailing 12 months, 21 billion for CRM, Adobe 13.68 billion. So pretty interesting how CRM blew away Adobe on just a sheer revenue standpoint. Cash on hand, 12 billion for CRM versus 5 billion for Adobe. And then when we talk about total debt, 6.4 billion versus 4.71 billion. So anytime you're having 21 billion in revenue, 12 billion in cash, I'm certainly not going to worry about 6.41 billion in debt, particularly since only 2.67 billion of it is long-term debt. So they're definitely in a healthy spot, despite the fact that they just bought a couple big companies with Slack and Tableau. All right, taking a look at TipRanks to see what the best performing analysts think of Salesforce. And we always scroll down and try to get fresh opinions, right? This is a company that has an earnings call coming up. And with that, often analysts you will see kind of hide under a rock as we get closer to the earnings date. If you look back, let's just start here. 2 months ago, 3 months ago, you had buy signals in the 270s, 280s. We know that the market has gone through a meltdown, right? So that's what makes this really tricky right here, is all these folks came in prior to the growth stock meltdown, but we do get one glimmer of hope, if you will. Greg Moskowitz came in 4 days ago and put a price at 270. 25 days ago, you also had a 270. So there's definitely some positive momentum from analysts, at least from the current price of 215. All right, so here's where we're at today. Just to review, CRM, it's May 17th. Current price is 215. Current forward PE on a GAAP standpoint is 66, and that's based on $3.25 of GAAP EPS. The analyst EPS projections for this fiscal year, $1.15 on the GAAP side, $3.43 on the non-GAAP side. Fiscal year runs Feb 1 through January 31st. So we are going to receive the update on Q1 here on 5/27. Now that's what makes things really interesting on the GAAP and non-GAAP side. Forward PE, I'm going to say that comes down as a function of the market over the next couple months. So I'm doing a forward PE of 55. That's very slightly below where they're at today. On an EPS scale, I'm giving them a benefit of a doubt. I raised this about 20% from analyst recommendations of $1.50 on the GAAP side, $4 on the non-GAAP side. What's interesting is this bottom line, right? If you were going to go off GAAP EPS on a 55 forward PE, the price would be $82. I don't think they're going to trade at $82, just to tell you. I'm sharing the math as it kind of works out. If they hit 4 on the non-GAAP side, fundamental valuation would be $220 this time next year. Now, I think that they can beat that. But what this line really just goes to show you is just to be cautious and maybe buy the dips when it comes to Salesforce, because the fundamentals are not going to support the stock price in the short term. All right, when it comes to Salesforce, as I showed you, it's a very, very interesting fundamental case study to look at, because you have revenues growing big, you have acquisitions, but the thing that's taking a hit in the short term is EPS. And you guys know that I really like to have strong earnings to kind of hedge against any significant downturns that we might see in a stock. Right now, all the stocks you see on the market that are getting hard, they either don't have earnings per share, or their earnings per share is well below what their stock price is implying, right? So I want to at least share what could happen to Salesforce, and that is maybe a stagnant to possibly lower stock price. I don't think it's going to go to $80 on the GAAP EPS side like I showed you there. But on the bright side, this company has plus 20% revenue growth over the next 2 years, and that's only on the projections. So they're doing really well. So here's what it would take, in my opinion, for Salesforce to go to 270 like we saw the analysts on TipRanks project, right? First of all, we've got to kind of reach a floor on this market meltdown, because what that's doing is lowering the PE multiples that Salesforce could potentially trade at, not just for their stock, but for everybody else's as well. So we need to hit the floor pretty soon on this sell-off. Next, you're going to need major outperformance from Salesforce, and I think that they're capable of it with their revenue growth, right? So they've made some purchases, they're getting hit on the bottom line, they need to raise their revenue growth, and that revenue growth can come from some of the new acquisitions, right? Maybe Tableau starts to turn into something. Or on the other side, of course, everyone's curious of how Slack will perform within the Salesforce organization. So whatever it takes to start getting some money back on the purchase of those companies would be great. But then there's also my bull case of, the world of enterprise sales getting ready to hit a big year after a not so big last year. I think with Salesforce, unlike, say, the travel industry, where everybody's piling in those stocks and the best case scenario is already priced in, I'm not sure if that's true on Salesforce. I think it's taken a little bit of a hit here recently, and there's definitely opportunity for the upside. So bottom line for me on Salesforce, I'm going to go with my gut here on the non-GAAP numbers, and I'm going to say that there's reasonable upside in the short term, maybe somewhere in the neighborhood of 250 heading into next year, based purely on outperformance of the company, meaning that the company will generate more revenue and more earnings than what's projected here today. And regardless of what happens over the next 12 months, I think that you can sleep pretty soundly owning Salesforce for the next 5 to 10 years, knowing everything we know about which way this company is going and how they continue to grow revenue in that software model that just pays dividends after dividends, because these companies are basically stuck with your software, even if they're interested in going somewhere else. All right, guys, those are my takes on Salesforce. I know a few of you guys requested this video. I hope you enjoy it. Please give me a like, subscribe to the channel. Appreciate your support. We'll see you on the next video.